enough, but I'm just restarting my laptop. So if can you start? Can you start?
Okay.
Yes, okay. So I have started also the recording. Good morning, everyone, board members. Thank you for joining today at our board meeting. So the main purpose of today's session is to approve the budget of 2026. We will begin by reviewing the key assumptions that guided the preparation of this budget, including the economic outlook, the automotive market scenario, the perspectives for 2026. Then we will move to the assumptions of the specific business, specifics of our business, covering our customers and the expectations regarding the sales volumes, margin updates, pricing, and operation expenses. After that, we will present the detailed P&L, which will be the first item of approval for today. Following the financial review, we will discuss the production line capacity for 2026, both blanking and slitting lines, as well as it's the basis for our headcount for the next year, the operating expenses and CapEx approval. And finally, we will address cash flow considerations for dividend payments and the approval of Forex exposure. Last but not least, we will review the strategic drives for 2026 and 2027.
Okay. To show how the budget was planned, we start by explaining the Brazilian economic scenario. These figures in this table on the left side are indicators adopted by AMG as the basis for building the budget. So we are using the same one in reference. In 2026, Brazil shows a scenario of moderate growth with GDP slowing from 2% to 1.5%. This weaker pace reflects the economy's dependence on agribusiness and credit, while public and private investment remains below potential. At the same time, inflation is under control, falling from 4.7% to 4.3%, though still pressured by energy, wages, and global trade. Monetary policy stays restrictive, with the Selic rate dropping from 15% to 12%, a level that remains high and directly impacts the financing costs for companies. The exchange rate is volatile. After appreciation in 2025, the Brazilian real depreciates slightly in 2026, reflecting lower capital inflows. On the internal front, the country faces a current account deficit of 3.3% of GDP, worsened by falling steel prices and an 11% drop in exports to the US due to tariffs. The domestic industry struggles with high interest rates, volatile currency, and logistical bottlenecks, which limit competitiveness and expansion capacity. In summary, Brazil grows moderately in 2026 with GDP deceleration investment is still below potential. Inflation remains controlled, but high interest rates and exchange rate volatility keep pressure on businesses and consumers. Externally, the current account deficit and weaker steel export highlight vulnerabilities in the industry. The scenario combines relative stability with external and structural risks, while opportunities lie in boosting investment, diversifying markets, and improving infrastructure to support the growth stronger. We also present the steel import scenario for 2026. We have divided these 4 topics that summarize the import scenario, mainly in relation to China's aggressive attempts to infiltrate the market with very low prices. On regulation, quotas and anti-dumping measures remain in place, with China still accounting for more than 80% of imports. In terms of supply and prices, limited domestic capacity and high costs are driving greater reliance on imports. At the same time, new origins such as Southeast Asia and the Middle East are gaining relevance, helping to reduce concentration risk. From a financial and strategic perspective, high interest rates favor finance, crucial to protect margins. In conclusion, the steel import scenario for 2026 shows both stability and challenges. China remains dominant with over 80% of imports, but new suppliers from Southeast Asia and the Middle East help reduce the concentration risks. Limited domestic capacity and high costs increase the dependence on imports, while high interest rates and exchange rate volatility make financial management more complex. Altogether, these dynamics may influence steel prices in Brazil, either pushing them down through cheaper imports or sustaining them due to finance and currency pressures. Deborah, you have been following these trading regulations very closely. If you want to add or comment anything, please feel free, okay?
Thank you, Gilberto. I have nothing to add.
Thank you. Okay, the Brazilian automotive market shows expectations of growth in 2026. It is important to distinguish the different market levels. TAM represents the total potential, SAM shows the addressable market, and SOM reflects what companies actually capture. Even with SAM expansion, effective growth in SOM is not proportional, which requires more focused strategies on competitiveness and real market share. Within this scenario, the CKD market gains relevance. It is expected to represent around 9% of total vehicle production, with annual sales estimated between 250 and 300,000 units. This highlights concentrated opportunity for expansion, especially in segments where local production is already operating close to capacity limits. This chart compares local production growth with SKD and CKD, showing how CKD becomes a strategic alternative to sustain the industrial growth, diversify supply sources, and meet rising demand without relying solely on domestic installed capacity. In addition, several Chinese OEMs, as you know, are debuting in Brazil with CKD and SKD operations such as BYD, MG Motor, Geely, through Renault, Changan, through Caoa, Jetour, Denza, and Leapmotor, either through their own operations, partnerships, or joint ventures. This reinforces the strategic importance of CKD and SKD models as a gateway for new entrants and as a driver of competitive dynamics in the market, in the Brazilian market. In conclusion, the Brazilian automotive market in 2026 is positioned for growth, but the dynamics are shifting. The expansion of CKD and SKD operations, especially with the arrival of Chinese OEMs through partnership and joint ventures, will intensify competition and also reshape supply chains. While this creates opportunities to diversify production and meet rising demand, it also puts pressure on local players to protect margins and strengthen competitiveness in the market. The balance between domestic capacity, import strategies, and new entrants will define how the industry evolves and how steel demand and pricing are impacted in Brazil.
Just one comment.
Yes.
In terms of the CKD, I just like to mention that in our projections, and in Arcelor, we are projecting a 5% growth, all right? Not a 9% growth, although I don't think it make difference in the projections or further for the, let's say, our own material projected ahead in MAG, but it's important to share with you that we have a different projection number for CKD. We agree that is an important point in terms of the opportunity, but our numbers are a little different. Of course, maybe we use different companies to support us in these predictions. Anyway, I'd like to mention that to you.
Okay.
Thank you, Khalil. Okay, now regarding Nissan Brazil, before looking ahead to 2026, it is important to mention Nissan's recent launches. In July this year, the new Kicks was introduced, and now in December, the facelifted version of the Kicks Play, the old Kicks, is being launched under the name Kite. This product updates reinforce Nissan's commitment to the Brazilian market and set the stage for stable operations. By the way, last week we had a meeting with Mr. Hasegawa, Vice President of NBA Nissan Brazil, and two of his comments were quite interesting. First, two of them regarding the new Kicks, sales have not yet reached the expected ramp up. And Mr. Hasegawa confirms that one of the main reasons is the high price of the car. And according to him, the new Kicks was designed within the Americas block, so including the US market, which means it comes configured with accessories and interior design is finished to meet the demanding America's standards. As a result, many imported components make the vehicle more expensive. To address this, Nissan Brazil plans to lower one trim level, one grade of the model to reduce the sales price and better adapt to the Brazilian market. The Nissan's procurement teams are already working on localizing components to reduce these costs. The second point that he commented, he spoke about the new model, the Kite. Unlike the new Kicks, this model is produced exclusively in Brazil and will be distributed across Latin America, including Mexico. With this exported strategy of Nissan, Mr. Hasegawa expressed strong optimism, betting on significant volume growth for the Heisen plant. He even mentioned about the volume that in 2026, the second shift will be almost full with 115,000 cars. And the third production shift is expected to be added in 2027, with reaching the maximum capacity to 150,000 units, reaching this maximum capacity of Nissan Brazil. Well, we really hope this increase materialize, but as you know, to be sincere, I'm not sure because not least never exceeded 80,000 cars produced, even when there were three models here, Marti, Versa, and Kicks. And according to Yoroso, information we received from Yoroso, the EDI currently points to 100,000 units for 2026. But Yoroso as well, they believe the actual number will be closer to 80,000 cars at most. So we may consider that our figures included in the budget are realistic. In summary, and in 2026, production volumes are projected to remain stable, maintaining levels similar to 2025. This stability is essential to provide predictability for operations. NBA plans to launch full service operations as well in 2026, aimed to optimize working capital for project P13C, the new kicks. This represents an important step to improve both financial and operational efficiency. And on MAG side, operations are expected to start in the last quarter of 2026, subject to final definitions on pricing, the consignment agreement with Usiminas, safety stock levels, and also Kanban management. These elements are critical to ensure supply chain fluidity and reduce our risks. Despite these pending points, we have an optimistic view regarding the ongoing negotiations for the full service model, reinforcing confidence in strategic alignment and the execution capacity. Cesar?
Could I make a question? Why the full service operation is only related to the new kicks? Is this a first phase and could be a second phase with the other vehicles, or is limited to this project because of something?
We think it's a phase one because as the volume is lower than the other car, the volume for the P13C, I think they want to test if the system is going to work well. So I think that's why they are starting with the P13C. Also because the P02H has a lot of carryovers from the P02F. So it's a lower cost vehicle. So I think they will plan a little bit better the transition to the full service. Of course, that if we do well with the full service of the P13C, makes no sense that they don't start with the P02H as well. So, but we do not forecast this for the next year, because until now, all the negotiations are only for the P13C. We have not received any information regarding the P02H.
Thank you. And what is your expectation to start in this business model?
Our expectation is to align and probably close the deal in the beginning of their new fiscal year, which starts in April next year. So we know that until April, they will not do anything. And so that's why we are considering October, because we are considering that we will close the deal in April. So we will align prices and sign the deal in April. And after that, we will have the management of phase in, phase out, purchasing from Usiminas and from MAG, and also the agreement of the logistics protocol between Usiminas consignment and Nissan and MAG. So that's why we are considering October only, because we think that it might take some time, because Nissan has around 2 months of stock, at least for the high runners. So this transition and definition, we think that it could take a little longer. So that's why we are considering full after October next year.
Okay, thank you.
Thank you.
Nicole, so related to the question, the Cesar, so I would like to ask you to analyze, study the informative, the forecast, if the MAG start the full services with Usiminas consignment to P02H after 2027. So
Okay.
That's today. So just one of our probe items only 2026, the business plan, the P&L. But Mitsui wanted the request to the study of the long-term forecast 2027-9 based on the full services for 2 models of Nissan.
Okay. We were preparing only for the P13C for 2027 and calculation what we were expecting of EBITDA in this condition, but we can add a second scenario for P02H as well. Okay, as for Stellantis, also would like to explain the current situation of the Stellantis in Porto Real. As we mentioned before in the previous board meetings and also steering committees, the strategy for Stellantis is to increase the car production in Porto Real is strongly linked to their ability to offset the ICMS tax credit. So they are moving forward with this plan very strongly. We are aware that we are not the only competitors in the region, as they have Galva Sud inside their campus, inside the Stellantis campus in Porto Real, and they are very competitive on pricing. And also we know that Stellantis is sharing their volumes only with ArcelorMittal and CSN, but CSN taking the highest amount of volume, the highest percentage of volume. And so this is information that they share with us in their visit here in October. So based on this, we have considered in our budget that we would receive the production of the new car, the Avenger new car, only in the exposed parts. So we were, I know that we were a little conservative, but and this information that we received was from Stellantis purchasing side directly. So this is what we consider when we prepare the budget in October this year. However, in November, we received some information from Stellantis saying that they will not just produce the Stellantis car in this, they will produce also the stamped parts for the new F1H, which is the Fiat Panda. This car is being assembled in Betim, but a lot of parts are being stamped here in Magneto, and we supply directly to Magneto and Stellantis. So this would represent for us an opportunity of growth for the next years, 2027, 2028, and 2029. This information from steel consumption came directly from the purchasing side from Stellantis. And this is what they shared with us while they were evaluating capacity for the next coming years, and if we could, how much tons we could assume for the next, for the 2027 on. But in our budget, we considered around 7,000 cars for the Avenger project, which represents only a share of the volume, the share of exposed parts, mainly ArcelorMittal materials, but also some CSN materials linked to our technical capability of the washing machine and supplying quality materials to Stellantis. So this is what is in our budget.
And they call just also another comment regarding the 2026. The number you mentioned in the graphic is 136,000 cars. So the number we have from them is for the same plant, Porto Real, is almost half of that. All right.
Okay.
So it's much lower than that. Okay, I think I suggest you later on you check if they have updated something or not. But even in this case, I understand you just budget from your side part of that, a small part of that is related to the new car. So I don't think also it jeopardizes what you have projected. It's my understanding. Please comment if I understand well.
Yes, I do. In fact, I think that we were positive in the starting when we prepared the budget. We were less conservative with the start of the Avenger because we are considering the SOP in April and May. But we already received the notification that we will be receiving 18 tools already. So we have already quoted this material. But for the CC2X, I think we are a little bit more positive as for next year because we are also dealing with some transference from Ferrolene, from some Soluções Usiminas. So I agree that maybe 136 is a lot. But we were a little bit more conservative in the budget. But thank you for your comment. Cesar?
In this factory in Porto Real, do you know if they are using as well this business model of, say, CKD? Because for the number of cars, it looks, the tonnage, it looks small.
Yeah, no, they are not using CKD.
Okay, so maybe there are other opportunities in stampers to supply something because this volume. is only kind of 150 kilos per car, and normally the amount of steel per car is much higher than 150.
Yes, but just in the 136, we're considering all of them being produced, but the light gray one part, which is the F1H, we said New Argo, but we now know that it's Fiat Panda. This is not being assembled in Porto Real. They are being assembled in Betim. They are being stamped in Porto Real. So let's consider 100,000 and 25,000.
To be honest, I was checking the numbers in 2029, just understanding the potential tonnage in this customer.
Okay, we can share later on this information also with ArcelorMittal team to see if the information that we have is the same, and maybe improve for calculation of the next coming years.
Okay, thank you.
Can I ask a question, Nico? Just to make sure, the Maggie's budget finally, the below table, 2026 budget Maggie, based on the 12,000 metric ton, or 2026 the 24,000 metric ton, which one? Reflecting business plan.
Is the 12,000 ton in the business plan.
Okay, so in that case, the 2026 potential to 24,000 metric ton and the balance of 12,000 metric ton is an upside potential for MAG in 2026, is it?
Yes, it is upside potential, but they are making this decision based on our capability of capacity. So they will not transfer 100% of the 2026 volume if we cannot assume the whole volume for 2027, 28, and 29. So we don't know how much they are transferring for us. They let us choose the materials that we are going to produce. And we will speak a little bit more in detail in the next coming slides when we are speaking about the capacity of the blanking line, to share our strategy also with Stellantis.
Okay, thanks.
Thank you.
So we have here a general non-auto industry market scenario focused on the four main sectors that have shown consistent growth in recent years. The construction sector continues to demonstrate resilience and steady traction, with 2026 standing out as a turning point in operational growth. Agribusiness remains a key driver of the economy, supported by strong fleet renewal and rapid adoption of precision technologies in the field. The structure steel is closely aligned with the national infrastructure rebound, with 2026 marking a clear inflection point in sector growth. And finally, the oil and gas industry is entering a new investment cycle starting in 2026, fueling demand for specialized equipment and high complexity services. Taking these four sectors illustrate how the non-auto industry is not only expanding, but also diversifying its growth drivers. This creates opportunities for suppliers and service providers, while also signaling that demand patterns will become more complex and also competitive. So, in short, 2026 represents a year of consolidation and acceleration, where resilience and innovation will define the winners in this non-automotive market. And regarding MAG's commercial strategies for Henrique?
We cannot hear you, Henrique. I don't know. It's not muted, but we can wait for you to solve this. We'll go on over the still.
Sorry, can you hear me now?
Oh, yeah.
Yes?
Yes.
Okay, sorry. No, just to complement information. Yesterday we received Caterpillar in Hortolândia, and we're talking about numbers. And unfortunately, what they say is that for the next year, they expect a flat year, considering compared to 2025. Don't have too much expectation to growth due to the problems we face with US tariffs, because part of the production in Brazil, for example, we export to US. So we have a projection very, very close that you show here for construction and especially agriculture machinery. But for the next year, we'll review here because do not expect to grow up too much, unfortunately.
Okay.
Okay.
Thank you very much. Regarding MAG's commercial strategy for non-auto industry, we can see in this chart for 2025 this year, the yellow bar representing our estimate volume to close December. We will end about 10% below the budget forecast, although this result is close to the target, part of from Fermator, the elevator system manufacturer we meet here. We didn't have any stable clients with almost all of our sales for non-auto were made in the spot market. This highlights the challenges that we will face in building long-term business in this sector. So to improve performance in the coming years, we plan to implement 3 commercial actions to strengthen our presence in the non-automotive industry. The first one is about commercial optimization. We want to replace the current corporate seller. He's like a freelancer salesman. In Portuguese, we say PJ, pessoa jurídica, replacing with a regional representative. Unlike a freelancer, a regional representative usually has established client portfolio, which may help us expand market reach more effectively. Initially, we will focus on selling obsolete stock from our inventory, while also developing stable customers who can buy steel regularly. We have already engaged with a former MAG employee. Now he is working independently. He told us that he can recommend us 10 customers aligned with MAG's standards for this liter process. So we will try beginning with him. In the second one is operational coverage with the proposal that MAG be a backup plant, backup service center for Solutions Usiminas, acting like as Rio de Janeiro branch. This geographic expansion across Minas Gerais area, Rio de Janeiro, and Espírito Santo ensures operational agility, business continuity, and strengthens our regional presence, offering better services to the customers belongs to this area. We have not spoken directly with Solutions Usiminas. However, we have already discussed this proposal with Usiminas, who expressed the support and offered to introduce us to Solutions Usiminas. This reinforces the viability of the plan and strengthens our confidence in moving forward with the operational coverage strategy. And the third action is commercial acceleration in partnership with Mitsui. Through systematic mapping and active prospecting, this collaboration expands our market reach and accelerates deal closures. Mapping also reveals opportunities to explore more industry sectors, while considering the barriers of tax incentives in the region that we faced mainly this year in 2025. These 3 strategies, sales optimization, operational coverage, and commercial acceleration, complement each other and form a solid framework to sustain growth and competitiveness in non-auto segments. After another year of this difficulty in serving the industry in Rio de Janeiro, we are determined to explore more the new sales channels and adapt our approach to overcome structural barriers we have here.
Can I ask you one question?
Yes, sure.
Yes, Gilberto, you pointed out the 3 points of your MAG's initiatives to increase the non-auto revenue. But it seems like there's no concrete targeted industry or not concrete targeted customers. So I wonder if it will be actually achieved by 3 initiatives. So sorry. Another question is how the number of 7, which is how can I understand that? Of 7,000 ton, 7.5 thousand ton for next year.
Yes.
So
We
how
planned,
how is it how is the figure reflected in the next slide?
Okay, it has to be just for. So this number was built based on the current customers that we already have, such as Fermator and Hafte and AMD. I think also is in this volume. And so these are perspectives from regular customers that we have, and a share of this is a target of prospecting. So it's a target that we are sharing with the salesperson, the representative, and also with Mitsui side. And it's a goal, it's a target that we must achieve for the next year. So based on what? Based on our capacity of free capacity for one shift in the slitting line, and based on what we have already been performing with some suppliers, with some customers, and speaking to them. So this is how we reached 7,000 tons. I agree with you. It is it is going to be hard to achieve based on the same reasons that we presented in all of those years that we've been working with the industry. However, we will not stop trying to achieve the number and also prospect new customers. We will keep our objective and at least to sell a part of our volumes as industry.
I don't request today, but I'll be happy if I can see a breakdown of customers out of 7.5. So that we can follow up the progress.
Mm-hmm.
Okay, we can send the split between the customers.
Yeah, and I also like to be explained about that. How is 7.5 is reflected in the next slide?
Okay, it is okay. It is on the okay. So for the P&L, we now are speaking of sales and margin, but based on the scenarios that Gilberto presented and the scenarios of our customers, market and customer scenario, we reached a volume for 2026 of 76,147 tons, which represents an increase of 14% in comparison with the 2025 forecast. Here we have put the main customers that we have. They are more responsible for the profitability of our plant and some assumptions. So regarding the question from Suzui-san, we see the 7,000 on the industry and others as spot, as the volume and the margins expected for these customers. So in terms of sales, so just to highlight how we got to these numbers, our budget includes the Stellantis Avenger project, supplying directly to Stellantis, so meaning tolling, and with better margins negotiated directly to them, around 7,000 tons. We're considering also the full service for Nissan for the P13C project, which starts in October 2026. Also, that's why we see an increase of margins for them. We are expecting a decrease in Renault volumes from Yorozu. Earlier this year, Renault informed that they had the intention of phasing out the volumes from Yorozu to another stamping company near Curitiba. In fact, they announced the phase out from our side, and then they pulled back because I think they're still in homologation phases, but we considered that they will make this transition because we know that they are aligned also with Usiminas and Solutions Usiminas. So we have already disregarded this volume in the next year, so around 2,000 tons less than what we have of volumes. As a risk, because it's not forecasted in our P&L, is the Gestamp blanking materials. We are speaking to them to outsource the materials to release more capacity of the blanking line to receive Nissan and Stellantis volumes for 2026 and on the other years. And this is not forecasted on the P&L because we are still carrying out this negotiation with Gestamp. Of course, we are agreeing with them. We're doing our best not to reduce their volumes, but to outsource the materials. But we still have not received some information from Gestamp side. As for price and margins as well, we are considering, as I said before, that Stellantis project is a tolling. So we will not be full service with Stellantis, and an anti-bunking of 1.4 million for price drop. And this is for sales. And
one point, Nicole, I just would like also to make sure you're talking about anti-dumping, so you make a kind of comment here about the price drop of 5%. And you mentioned Usiminas and ArcelorMittal. I just like to make clear that it's your assumption as MAG assumption, yeah, because we have not finished any negotiations as, let's say, ArcelorMittal, so with the OEMs and so on. So this is your MAG assumption, all right? This is what I would like to make clear here.
Yes, I imagine that you would comment this condition. And yes, this was the information that we do not have any firm negotiations from ArcelorMittal or Usiminas side. This is from hearsay that we heard from some people from the mills and also especially from the customers. So we found it better to consider because the impact is important for us. In case it's in this 5%, we have to consider in our P&L.
Yeah, as much as you're talking about the stock, as much as the price reduce lower, there's lower reduction, better is the result. Yeah, that's what you mean.
Yes.
Okay.
And for the OPEX, because everything is combined in the same P&L, and for the OPEX, what we are considering, okay, that's okay.
Sorry, in the previous slide, could you explain a little bit the columns? Because I'm not sure if I am understanding well. The volume is clear, sales in reais, and the rest?
The sales is net sales, and the cost of goods sold, which will lead us to the gross profit. So in our P&L, we don't have a clear view of the costs. We only have the clear view of the gross profit. And we separated for customer because we want to show the profitability of each customer and that what is expected for the next year. The GP margin is as a percentage of the GP over the net sales, and the GP per ton is the gross profit Brazilian reais per ton of each customer, each group of bigger customers that we have.
But this is gross margin.
This is gross margin. Yes.
All GP means gross margin.
Yes.
GP per ton, GP in percentage. I understand because this high work is higher. And do you mind to repeat what is the COGS? I didn't get it, sorry.
It's cost of goods sold. In our P&L, they represent the cost of the coil plus the packaging plus freight. This is how
okay.
we calculate this information.
Okay, okay, yeah, clear. Thank you.
Susan?
Yes. From this table, it's obvious that some customers as Nissan or Gestamp, for them the GP margin or GP per ton is really much less than the others. So Gestamp is we are a shareholder of Gestamp. Gestamp is a strategic partner from Mitsui point of view, but from so I wonder if we should continue the same this type of business with only 2% GP margin. So considering the capacity of MAG, so it may be good. It may be better to work with other customers so long as the GP level is so low. So I have such kind of continuous concern about this customer basis GP margin.
Yes, I agree with you, but we constantly ask ourselves the same question. It's a very delicate position because Gestamp is part of the group, and we have to carry out a conversation with them. I think that the blanking line situation, because it's being saturated for the next years, I think this will be a very good point to start a conversation, a very serious conversation with Gestamp. The group, the AMG, will support us with this in this discussion with them, because we will not have capacity to accommodate their volumes unless they adjust the outsourcing. So our intention is to have a conversation with them and explain we need to outsource because we need to produce Nissan materials, especially Nissan materials, and now also Stellantis. Either the new price will be this one because we are outsourcing these materials. Otherwise, we will have to decline the project, which is not what we expect, of course. And we want to offer them other solutions. But I think this will be a good starting point for this situation with Gestamp.
Yeah, obviously we have to increase the corporate value of MAG. So like to have a continuous discussion with you. Thank you.
Yes, I agree.
This number, Nicole, is affected by this 5% anti-banking, I guess.
Yes. Also, Yorozu, as we see, that is a little lower. It has the effect of the no volumes leaving, but also the anti-bunking and slow-moving materials. That's why it's very flat.
I fully agree. These numbers are unacceptable in terms of margin with Gestamp. We shouldn't continue this to have these numbers. We can escalate if you need any support from Gombarri side. I disagree, and I fully support this intention that if we were having a lot of capacity, but once we are about to be saturated, maybe this is slitting, and slitting is so not that saturated. But with these numbers, it's not worth working.
Yes, you are right. Thank you. We will probably need the support as well. Enrique already offered his support as well in this discussion with Gestamp, and we will be carrying out, and we will keep you informed. Just to remind, I know that we have a lot of new board members. These negotiations with Gestamp, they were made in a long past, in around 2019, with the volume of 3,000 tons per year. But now they are reaching over 16,000 tons. So the impact is much higher right now. And though we are seeing here very bad conditions, some of you will remember that in some years ago, the gross margin was negative. We recovered some of it, and but still it's not adequate to our levels of costs and also of profit. Kenji-san?
Yes, thank you, Nicole. About anti-banking, do you expect some portion of this 1.4 million will be registered during this year, current year?
I believe not. I believe that we will leave it for the next year.
Okay, thank you.
Thank you.
That's a question, Nicole. Sorry. One comment. So can you please break down the customer base more details, like Nissan P02H, Nissan P13C full services, and also I'm a little bit confusing. So AMG Magnet Stellantis, maybe this integrated all portion for Magnet Stellantis, Jeep Avenger, CC2X, right?
Yes. I can separate. Okay.
Yes, please.
Sorry.
Yeah, and also industry and others. This may be the non-automotive, right?
Yes.
So I think sales volume in this table is the different from previous slide. Maybe Susan pointed out this point. For example,
Okay.
2025's 2,600 only, right? Sales volume, but the previous slide is maybe around 5,000. And also 2027, so around maybe 5,700, but the previous slide is 7,000, I believe.
Mm-hmm.
So there's discrepancy, the sales volume. So which is correct?
This one is correct. This one is what is on the P&L. So this one is correct. We can check for the previous slide.
Okay. Yes, please. And then, so if necessary, please revise.
Yes, sure.
Sure. With customer breakdown, so more detail. Appreciate it.
Yes. Okay.
Another question is, by when the banking effect will be decided, agreed, within the mill and also OEM?
In the 1st of January.
Oh, 1st of January. Okay.
Yes. We'll have final information in the 2nd of January, let's say. Just to finalize for the assumptions, when we calculated the operational expenses, we considered the inflation in 4.79%, and also for salary adjustment of 6.23%. In the forecast, we see we included the debit note from Yoroso from the issue that we had in the beginning of this year, so in 425,000. So this will be, even though if we don't pay this year because we are waiting for Yoroso to issue the debit note properly to us, we are already considering 2025. We will make provisions for 2025 in the results. Okay, so as for the P&L, so we reached 76,000 tons, 14% above, also 15% above in net sales. And gross profit, we don't see much evolution, and we do not expect great evolution. We are, even though with some changes, we expect to be in 441 reais per ton. In operating expenses, we expect to grow 5%. In details, we'll see more details in the next slides. This will lead us to an EBITDA of 13 million, expected 35% growth in comparison to 2025, and a PAT of 6.7 million also. The PAT details, the breakdown, you can see in the right, and these are pretty standard information of taxes and amortization.
And Nicole, just one comment. So I believe that you have negotiated the price increase based on the average inflation, the 5% to the OEM's tier 1. However, the OPEX will be included based on the IPCA 6%, right?
Yes.
So that's why the GP, that's why the EBITDA how to say, the price increase is offset So the to OEM and also the SGN, that increase more than price adjustment to the OEM's tier one. Is it my understanding is correct?
I don't think I understand what you mean. I'm sorry. You
Sorry,
mean that
I think the base. Yeah, actually, it's sales on the previous slide. Actually, the Maggie's sales plus GP per ton to the customer is
okay.
not increased, almost same.
Yeah. Yeah.
So
Some
this
are
is
the same.
because the banking effect, right?
Yes. Yes.
So
Trend, market trend.
the market trend, but basically the Maggie's price should be adjusted to based on the inflation, right? 5% basically.
Yes. This is what we propose to the customers. Yes.
However, so the offset by negative banking effect.
Yes.
That's why the GP margin, the GP per ton is almost same level.
Exactly. Exactly.
Okay. In addition to SG undercast OPEX, will increase based on the IPCA, the plus union strong presence, the 6.23%. Is it?
Yes. We are speaking of percentages in different phases, but in terms of percentages, yes, you are correct. It's 5% flat around for the margin. However, as we are selling more, we are increasing the gross profit. And in terms of operating expenses, we grow around the inflation. In this case, sometimes when we increase a lot of volumes, we also increase a lot of operating expenses. In this case, we are considering the same structure. So we are growing only in the inflation percentage index.
I see.
So this is the first line for approval. I think as we also have the lawyers here, can we consider it approved?
Yes, I think so. My side.
I'm okay as well.
I'm okay.
Yes.
It's okay from
Thank you. Okay, thank you. So for the just for information for the blanking line capacity, this is what we have been speaking. We have received a formal consultation from Stellantis side because they had an expectation of producing 100% of the steel in our plant. We know that they will not produce 100% because they also have a strategy of sharing volumes. We know that they will share volumes with CSN Galva Sud. However, we know we are better in quality and logistics deliveries with Stellantis and Magneto. So we received this formal consultation with them. And I have separated in two scenarios. The first scenario is with the current situation of the blanking line, which is with Gestamp volumes. And just for information, Gestamp volumes, we have some tooling volumes and we have some other cuts, what we called oscillating cuts, the oscillating one, trapezoids, and straight cuts as well, but very small parts. So they reduce a lot of our capacity. In an average, this machine produces for big materials, for Nissan and Stellantis materials, from 8 to 9 tons per hour. And with Gestamp volumes, we have to reduce this to 3.9 tons per hour. So we are making this study and to accept the volumes from Stellantis. We could, in the first condition, in the first scenario, we could not accept much of Stellantis volumes, as we see in the dotted line in the first scenario. The light blue is the Stellantis volume, as we have Nissan in gray and Gestamp in blue. The light blue would represent all the consultation volumes from Stellantis. So if we remain with Gestamp in this condition, as we know, not very profitable and taking a lot of our productivity, we would be able to accept very low volumes from Stellantis. When we look at the scenario 2, when we take out this Gestamp volumes and we keep only the tooling, the materials that are cut using the tooling, we can increase our capacity and we can accommodate around 20,000 tons of Stellantis in our blanking line. Our capacity of the blanking line in regular is 48 to 50,000 tons per year. and we are now considering to accept 20,000 tons of Stellantis. This is what we are negotiating. Of course, it depends. We decrease and decline some materials or outsource the Gestamp materials. So this is just for reference for you to understand our calculation of the saturation of the blanking line.
What is the scenario you have used for the budget?
For the 2026, we are considering still Gestamp.
Okay.
We are considering this low.
Just for 2027.
This is just for 2027 because we need to start the negotiation with Gestamp immediately. So we can also, because Stellantis will not nominate us if we cannot accept for the remaining years. So of course the volumes for them in 2026 are not high because they're starting the launches of the cars, but in 2027 onwards they will stabilize these volumes. So they will nominate us and we need to choose the items. They asked us to choose the items, the high runners or the most productive ones that from our choice, but with the commitment to still produce their parts from the other years on. So this is the study that we are conducting, that we are speaking to them. We are also making these calculations either in parts, in pieces. It was a demand also from Gombahi side, and we will finalize this calculation. But still, we do not see other choice than decline or outsource the materials for Gestamp with their approval of the new price.
Okay, it's clear that it's very interesting, this new business compared to the Gestamp business.
Yes.
Just make sure, Nicole. So that you are using scenario 1, budget 2026, including Gestamp, yeah?
Yes, we are, but we are already considering. We have not considered here, but we are in the budget. As we see, there is a potential of growth, as we showed in the first slide of Stellantis. There is a potential. So what we are doing is negotiating with Gestamp already, because if we can negotiate with them, decrease the Gestamp numbers and assume more volumes, then we can we will not see this effect in 2026, but we will definitely see it in 2027. Okay. Okay, Kenji?
Yes. Thank you, Nicole, for this two-scenario study. I think it's important to consider also ICMS credit position due to Usiminas consignation, right?
Yes, you are right. For now, we are speaking with outsourcing. If it's outsourcing, it doesn't change. The ICMS scenario is the same. But if we have to decline and not produce and reduce these volumes, then we have to do again the scenario of ICMS with Usiminas, the consignment. You were right, yes. Okay. For the slitting line, we have no. This is split per month, but we have no need to increase another shift. Whenever we have a need of produce over the capacity of one shift, we are producing overtime. Just to remember that we have a system of banking, and I don't know how to say this in English, but whenever we have space, people stay home and save the hours, and then when we need overtime, they come. So not necessarily we will have too much cost of overtime. But in the event of increase, we will probably use overtime, not increasing one shift. We don't have any view of the market to increase another shift. Okay. So based on this, we will not reduce or add any more direct labor, because we will keep with the 3 shifts in the blanking line and 1 shift in the slitting line. Indirect labor also no change. And for SG&A, we have reduced 1 finance analyst because this activity was concentrated also in AMG as a central as corporate. So we remain with the same, only one person less, but remain with the same ones. Sorry, you have to approve this condition as well. Condition of people.
Approved from my side. Thank you.
Thank you.
Approved. Approved.
Approved.
Approved.
Thank you very much. So just for reference of the operating expenses and some variations above what was considered the inflation, even in the salary adjustment. When we speak of personal expenses, there is a difference in the direct labor. We don't see the same difference in indirect labor and SG&A labor. They are the same. We are considering the inflation variation for them. But in the direct labor, we are facing a high turnover of direct labor in our plant. As you know, we are near a region where we have very big companies such as Nissan, Stellantis, and Volkswagen. And the direct labor, they come and go between these companies. So we know that we are not very competitive in terms of salary. We are in terms of benefits. We have same level of benefits, but however, in salary, we are proposing to adjust to attract and retain these machine and logistics operators. And we are aligning our pay scale with these market standards in the region. So this is the only difference. When we speak of power, water, and gas, the utilities, as you know, for power, especially the high increases on power, we received power from Nissan, and there was a negotiation that Nissan had with their provider of energy, and they had an increase in the supplier park, and they are sharing this increase with all the companies in the supplier park. So us and Yoroso and other suppliers here are suffering the same condition. So they changed this in the middle of this year. So we are considering this for the next year. And also every maintenance that we have to do with them, that we put it in the maintenance, but every maintenance that we have to do it's our responsibility, is not the city responsibility, is the Nissan Park responsibility. And we have also to afford these conditions with them. In terms of PPEs, it's PPI in Portuguese, and uniforms, we are renewing and we are distributing uniforms to our employees. And so that's why it's a little increased in relation with the forecast of 2025. For maintenance, besides the Nissan supplier park infrastructure, which is mandatory, and we were able to ask them to do in 2026, because in 2025 we didn't have this on budget, so they agreed to put it in 2026. And so we have considered this increase in their volumes. Also, we expect that in the next year, with the Stellantis volumes, we will have around 65 toolings active in our production line. So this is an increase of volume of the tooling. So we are hiring a third company that is specialized on doing maintenance for these. And we do not have manpower. We have only one tooling responsible. So he will assist, but we need another company to support. We are next year also, all of the materials that we are considering in our budget will probably be washed. So we are speaking also more frequent maintenance in the washing machine, some other maintenances that are being mandatory. So this is why it's a little bit higher. In terms of trips and lodging, we are considering some allocated budget for potential trips that were not carried out in 2025 for the increase in management fees. So these are the costs shared for corporate services, including SAP, basically SAP and software licenses, on-site personnel support, with variations from also exchange rate and license pricing and some service fees. For third parties, there's some rework from quality that we probably we're considering, because we are increasing volumes also with Stellantis and Nissan, and some IT consulting that were not being charged from AMG side to us. So we are now considering our budget. And in leasing, we had a saving during the year 2025, but we will have to perform this because we didn't renew the equipments, the IT equipments in 2025. However, we will need to do, because the contracts are ending in 2026, and we will have to renew this in 2026. So when we compare the data with the strategic plan, we are in the same volumes, but reduced operating expenses, and representing a growth in basically in variable costs, very aligned with growth of volumes, but some reduction in fixed costs in comparison with this year, 2025. Okay.
Can I ask a question, Nicole?
Yes.
What is the other in the fixed cost?
Yes. Other usually is what we call the difference of taxes from when we purchase maintenance materials. Usually what is allocated in this account is these materials that we purchase from maintenance from other states. They have to pay a fee, and this fee is not allocated in the material, it's allocated in the other expenses. But this year, what is growing a lot is also the euro. In 2025, we see a decrease from 2025 to 2026 because we are not considering to pay another debit note for Eurozu, because the Eurozu debit note is being accounted on this line of the operating expenses as other. And so that's why there is a reduction from one year to another. Also, we are considering some improvements in the system, so that would allow us to allocate some of these taxes directly to the material instead of putting as another. So that's why we considered only 115, a decrease from one year to another.
So in the forecast of 2025, including the compensation to Yorozu.
Yes.
So I think and the Nissan, so around the 500,000 Brazilian reais. That's why the forecast 9+3 is larger than 2026 budget.
Yes.
I see.
In other years.
Another question is maintenance Nissan supplier park infrastructure mandatory. So is this responsible by Nissan, isn't it? So Maggie have to pay?
Yes, because in the agreement, you will remember, in the agreement, after you pass through Nissan and reach the round to MAG, after that step on, it's our responsibility from the suppliers in that street, in our street. So a part of this will be covered by Yorozu, a part will be covered by Kinugawa, and then the other part will be covered for us. The part that is from our land, that is in our land. We try to this
Thank you for explanation, but
there is a contract.
Nissan, that's why.
Yeah, there is a contract that was signed in 2014, and it says that we are responsible.
I see. And also, one of the question is the power, water, gas, the fee charged by Nissan. So in the agreement with Nissan, so you have to use power, water, gas within Nissan Park, or you can choose the resources, the electricity, power, gas from other resources. Which one?
The gas, we can choose our own, but the gas it does not increase that much. The water is the same one in the region, so the fees are the same. And the power, we could have another supplier, but we would have to build the infrastructure, the substation.
I see.
We have to, and we saw, and it's very expensive. It's over 1 million Brazilian reais to build this infrastructure. And the negotiation that still we looked in the market, because we also did not agree at first with this, But we look in the market, and the fees, the energy that other companies pay are usually higher than what Nissan has negotiated. They buy green energy from renewable sources, and it's still better fees than other companies. So we will stick with this, even though there was an increase. But it was the first time that they increased in over 10 years. So this is one of their arguments. It's the first time after their negotiation they increased, and we were able to stall them until we did all of these researches, and so that's why it only started in the second semester. And but still we are so we will not see the effect 100% in 2025, but in 2026 it's going to be all in the new fee. We have more details of the fees if you wish to. We can send it to you.
Thank you.
Nicole. Oh, sorry, there was somebody waiting as well.
Okay, Kenji-san, you can go.
Kenji-san.
You're on mute.
I'm sorry. My question is almost same as Kobayashi-san already said. Because if this part others is not the usual cost, right? Usual expenses. So excluding those these expenses in this year, in general, our expenses will be increased for 2026. Little bit more than inflation cost, right?
Yes, but we are also considering some SAP improvements, so that's why it's lower.
I understand. So basically, this maintenance cost on the power gas is much more than inflation increase.
Yes, exactly.
Thank you.
Cesar?
In our price agreement with Nissan, if they are increasing our cost, do we have the opportunity to increase the price of the process?
Yes, in the new quotations with them, we already increased the cost of the washing machine, and because it's clear, we have clearly in the breakdown the cost of the washing machine, so we improved. But the costs of personnel and other I use the same argument with them, because when they said that they would increase the energy cost for us, I said, okay, I cannot do the same proportion of increase for you. And we are using this as an argument to in our how do we say, Plato, in our price adjustment request for them. This is part of the argument, but this is not clearly stated in the breakdown.
It's on the negotiation, let's say.
Yes, it is.
Okay, thanks.
Okay. Okay, so for the CAPEX approval, as we do not have CAPEX for any investment needed for improvement of the and growth, they are most related to normative, and we are speaking of normative when we speak of set of knives for the slitting line, which is basic for our production. We need to purchase this as an asset. We are talking these pantograph tables. They are tables. How did I explain this in English? So our operators, they need to put the material on a table to do the packaging. Currently, they are doing it in a table that is not homologated. So we received a negative point on the audit for this, and they requested us for changing, and it could represent a risk also for the employee. So that's why we are proposing. As we have some IT items as normative, we are considering the replacement of Wi-Fi network, because they will have a life end. in this year, in 2026. Nota fiscal and tax reform, they are mandatory because we need to update everything for the tax and tax reform and the nota fiscal for the next coming years. So we are starting in this year, in 2025, but there are other phases, and 2026 we'll have phase 2 and this improvement in technical notes. And we have a carryover from the same one that was approved last year. It's already in process. As our budget took some time to be approved this year, so we started later, so we have to carry over an amount. And of improvement, we have one that was considered in the strategic plan, is an acquisition of another crane crab. It's for safety as well, because currently our operators have to use another one, which could be a risk for them. Could be? No, it is a risk for them. And also some we call it gantry cranes for individual fall protection system, but it's basically when we are loading the trucks. Currently, the truck driver has to come up over the truck to tie up the cargo. So this cannot be done without life-saving, what we call life-saving line and safety line. And so we are implementing some mobile ones, something that we can move around the truck, the gates, and so they can safely strap and the cargos. So this amount of capex is already forecasted in our cash flow. And as I said before, we are considering 81% as a normative and only 19% as improvement, but safety improvement.
Okay for me.
Okay, for an image sign.
In one question before the approval, this has been agreed with the technical department in corporate?
Yes.
In Gombarri?
Yes.
Then I'm fine. Thank you.
Okay, thank you.
Yeah, so Kobayashi also approve, but just one request, so Nicole, so this kind of 2.2 million, I think the capex for safety and the productivity improvement, well-being is very important. So I will approve. So, but I appreciate you try to negotiate with vendor to reduce the cost.
Yes, of course.
Because the price
Yes.
looks bulky, so maybe we estimated the cost maybe. So I appreciate try to negotiate with vendors to cost reduction.
Yes, of course. The industrial manager is here. He already heard your message, and I agree. We need to improve. So the message is clear. Thank you very much.
Thank you very much, Leonardo.
So let's move to the cash flow because we are running out of time and I'm getting worried. And these are very important slides, the next few ones. So for cash flow, this year, 2025, was particularly challenging for us. We faced significant pressure due to high inventory levels, especially in the second semester. This impacted the cash flow through the year. The situation was driven by multiple factors, a lot of reduced orders from the customers, projects phasing out, so customers leaving the materials with us. We are still negotiating these materials, but they are still here. New projects with a lot of materials that we were purchasing, one coil for supplying small ones. So these launches for Nissan, for the new projects of Nissan, impacted our stock as well. Slow-moving materials were associated in the new projects as well. We are seeing a lot of new projects from Yorosu signed with slow-moving and other reasons that you are very familiar with. So what we are, our expectation, we are targeted to normalize the inventory by April into regular levels. We started with the consignment project with Usiminas. Became operational in November, and in December However, the volumes were not sufficient to reduce the inventory by the end of this year. But there are some additional actions that we've been carrying out with suppliers and also with some purchasing and sales teams. We have expanded the GIT from Usiminas, the consignment with Usiminas, with a clear analysis of ICMS credit, of course, and we expect to improve this in the next year. So all of this should say that we would request, okay, we are planning the dividend payment of the year 2024 results to be paid until March because of cash flow only. And we are planning the payment of the bank loans by December 2026. And we are planning also the payment of probable PAT of 2025 and the unrealized profit from the fiscal fees in the past years, and of 3 million in December 2026. So this is what it is forecasted on the cash flow. We understand that cash flow was one core topic for our organization, and we are going to. This will be the focus of our work in the next year. We're involved in purchasing, sales, and also our meals, and in working in partnership, reducing the stock, and with the consignment, of course, and also with some improvements. And we expect to get in better results in 2026.
Nicole, can I ask a question?
Yes.
Multiple project phased in out during year. New project introduced slow moving. What kind of new project? It's unclear.
A new project that were the new project that started this year. You mean?
Basically, the stock inventory for the two customers, Yolos and Gestamp, right? So far.
Yes.
So
yes.
please should explain more clearly. So what's kind of because the two customers only, so they're doing the stocking. So
Yes.
it's the explanation is a little bit unclear. So please clarify. So what's kind of a new project introduced to P13C and P2H?
Yes, for Nissan side, yes, P028 and P13C. So we are supplying to Nissan, of course, but other tiers, and sometimes the volume. So Nissan specified some specific steel grades with some thickness and length different, different. So but the consumption was, for example, from one material, 2 tons per month, but we have to purchase the coil in 15 tons, sometimes 20 tons. So this happens with some negotiations between the customer and the supplier and the mill. And of course, some of them we can charge the customer, but it's not sufficient to eliminate the stock. So we are seeing a movement of stock of hot materials over 90 days and half coils. So we purchase 15 tons and we have a half of a coil. After 90 days, we have 7 tons still waiting to be processed. So these two projects, also some 2 new projects for Renault, which is the X1312, and the other one I do not remember.
B028 and L028.
Yeah, these ones they are being produced by Yorosu. We know that the stocks are very high for Yorosu side. The target is very high for them, and also they receive materials that are imported materials. They are not too much, but they are with minimum order quantities from imported materials also high. So what we are seeing is not just an increase of stocks just because the customer reduced. This happens as well. This happened especially in this last trimester. But along the year, we can see a growth in the materials over 90 days, which is generated by these slow-moving materials with low consumption, and also as you already know, some problems that we face with Yorozu specifically. We have done several actions to improve. We are being supported. Mitsui side is supporting very much, is very much improved, but still we have room for improvement for the next year.
Is it possible to show the breakdown of stock position per customer or the aging?
Yes.
Yeah, because I'm not sure the slow moving items, the 2 tons per metric ton, but the minimum order quantity around maybe 200, something like that from overseas mills. Right? But
Yes,
on
we
the
have
other
as
hand,
well.
the stock position at the end of the November, the December, so 9,000 metric ton. That is not only just a slow moving material. So
No, it's not
even the
slow-moving material.
moving item is also including this a major part of this 9,000 metric ton, the forecast of stock coverage, isn't it?
Yes, from this we have around almost 6,000 related to. We do not say just Yorozu, also some tiers of Yorozu. And yes, there are imported materials. We can share the indicator completely, the indicator to you if you want to see in details, because some effect is related to the customer decrease in October, November, December. We are seeing drastic decrease from Nissan side in production of cars in November, in December, and Gestamp also, they decreased their orders in October for November and December, drastically reduced. And with today we are still purchasing materials as direct from Usiminas, so we could not cancel all the orders. Some of them we were able to put in consignment, and some of them we were able to postpone, but the other ones, they come as direct. So there is an effect of reduction from customer. There is another effect from new projects with the slow moving materials, and I mean local and imported materials. There is the effect of old projects like Nissan Frontier from Mexico that is now moved from Argentina, that is now moving to Mexico. There are a lot of materials here for the CSN, the GM CSN materials that they were entering, and some of materials stayed here and they did not take. We are still negotiating with them, but these represent also they will stay in our stock until the customer decides to leave to take them.
Yeah, I remember that. So this kind of stock position including started 1 year ago, and then so the original plan is repayment to the bank loan is December of until the maybe July of 2025, and extend in December, and this time extend to the December next year.
Yes.
So
yes.
I think its stock position is increased. So unfortunately, the stock control and the positioning control is not like was not going that well based on your plan. So
yes, I agree.
Yeah, we need to think about some drastically how to control the inventory level position, the carefully. Yes. I think this kind of the stock position will continue by the end of December of 2026, I believe.
Yes, what we are also considering some actions in automatization of the process, because today everything that our planning team does is manual. So they order manually, they put it in the system manually, everything is manually. So we are considering some digitalization of the process and also professionalization of the people that are here, because we had some new people as well. So the team is very new. People, this area, I think Enrique can share also some, but this area has it's very complicated because dealing with the mills and dealing with the customers is very tough on them. So we have turnover. So we have a person that was hired 1 year ago, and another one that was an intern that we promoted as a so we have to go through this movement with them. We have to professionalize them, support them, and digitalize their process so they can be more analytic and make a better control of stock, and also make more proposals for the customers. So today we received everything from the customer, and okay, not Yorozu is another world, but we receive information from the customer and we agree on what they are saying. So sometimes we have the same part being purchased in the same steel grade, but with different width, and we can negotiate with the customers to buy to the mill and also to buy in a larger width, so we can produce better in the production line and reduce the stock of the slow moving material. So there are opportunities that we are considering. There is an action plan that we are doing, and also to put everything in the system. So there is an action plan. It's being followed. And so this is why we are considering this improvement for the next year. This is based on the actions for KPIs.
Yes, so yeah, I appreciate do that. So because the big headache from this stock position is, the maintain some high level. So like using digital solution, like, and I don't know, the big data or AI. So the input order production and also analyzing the, historical, the production and order quantity from your loads against stamp. So you may be able to analyze some kind of, minimum order quantity that to the on the input for the Ujiminas, for example. So I think digitalization is if you have any good idea so far, yes, please facilitate take initiative with the sales team and also the production team.
Yes. I agree with you. We are working on these actions as well. Cesar?
And in the stock coverage, where you calculate this number, I don't understand the number, because we are starting this consignment with Usiminas for part of the business, and by the end of next year, 2026, we expect to do some sales with this support. So the buy and sell business is bigger, but with a low stock, the stock position will be 4,500, and you are considering this only covering 2.4. So I'm a little bit,
Yes,
maybe I'm doing the wrong numbers, but
no. We in this case we are considering for the stock coverage only the demands for the full service. We are not considering 100%. So when we did the stock position, we put the demands from the customers that we purchase materials, and so if we and we are considering the demands for the following months. So of course,
yeah, but
when we
I
see,
mean, but I was thinking on that in the future we'll have more full service, because part of the Nissan volume will be full service as well, and in
Yes.
parallel we have less stock, so the coverage should be much lower.
Yeah,
That's a comment. It's not very
Okay.
important. I understand it's not affecting the calculation, but as a concept, I
yes,
was
we
not
can
understanding.
check this.
No worry, it's not important.
Okay, we will check this information as well. Okay, so based on this data for the cash flow, and we need to speak of the dividends. And I think in the material that we shared, our initial proposal was to seek the board's approval for the dividend distribution in light of the recent events of the approval of the bill 1087 that was very recently approved by our government. This legislation states that the dividends distributed to shareholders outside Brazil will be subject to 10% tax for approvals that are made after the 31st of December 2025. So our intention here today was to deliberate the distributing of dividends from retained earnings and in several installments until 2028. However, as this law is very recent, and the way that it was written leaves room for multiple interpretation, and as a result, also the legal team of our shareholders, AMG, AM, and Mitsui, they still have different views of whether we can do this or not. So we will not be approving the dividends today. And we still need to reunite these three companies. So my proposal is that we reunite with the legal teams and finance teams from Mitsui side, from ArcelorMittal side, and also AMG side in Brazil, to clarify what we can do with the retained earnings and what can be approved. Because the understanding is that if we approve, we have to in the legislation we would have to make the payment until 60 days of the registration. So we would lead us until the 31st of March, around 31st of March, as the deadline. And we do not have the cash flow capacity to anticipate 18 millions of dividends. So we will have to understand if what is possible, what is legal or not. So I propose that we will do this discussion with these teams. And for now, only the approval of the 1.7 million from the results of 2024 to be paid until maximum March 2026. Okay, so this one is okay. The number is already approved and the number is closed, and we are asking only for this amount. For the remaining amounts, we might have to have an extraordinary maybe meeting between all the companies, or just an email to understand with the legal team what can be done, and then we will approve maybe until the end of, but until the end of the year. We have until 31st of December to make this approval.
Nicole, I have one comment, two comments. First of all, regarding the one you want to approve, that is the 2024 and 1 point something million, and you mentioned that the payment would be in 2026. And that is a point that I also I'm in doubt, because as far as I understood, I'm not specialist. That's why I agree with you. We should be deep diving. I understand that there's an article 205 that explained that once approved, it have to be paid in 60 days, but in the same year. So 60 days, but in the same year. So the one that came first, that is another point. So if you want to approve the 1.6 million to be paid this year, and if we have cash to that, is okay, is one thing. Okay, but if you're saying that it's going to be paid in 2026, I think it should be deep dived again with our tax people and lawyer people to check again if we are doing the right thing or not, or if it's going to be applied in the 10% tax as well the next year. So I have this doubt. And of course, I agree that the balance of the other you previously was intending to do here, that should be deep dived, because we have to be very sure about what we are doing, if it's under the law and if it's aligned with, let's say, our company's policies. Okay, so that's my concerns.
Okay, so for these, then for the 1.8 million, I will check in two sides. If we are not able to pay without the taxation until March, we will make the payment this year. But if we are able to make the payment without the tax, the extra 10% tax, we will postpone to March. We will evaluate this information during this next week, and then we will keep you informed.
Yeah, it's not only because of the, let's say, 10%. It's also 10%, but because, as far as I understand, there's an article in the law that say that it's 60 days, but in the same year. So if you are overcoming the year, it's not 60 days, it's 20 something days. So that's what I want you to check, because otherwise we would be doing wrong things.
I will check. So as Kalil mentioned, I think I know that all of us here have different information from finance and legal team. So I propose that we speak more clearly in the maybe next week, and to evaluate in the best condition. And after that, we will propose an extraordinary, maybe another meeting, or maybe with the legal information clear to all the shareholders of what the decision be taken.
Okay, we will be at the disposal for the extraordinary meeting, or the way you want us to do the further analysis.
Okay, perfect. Thank you very much. Kini-san?
Yes, thank you, Nicole. Just to complement that, I think it's important to also analyze if in case of dividend payment after the year that they deliberate the dividend, if there is some consequence, some penalty or something. I understand that there is no penalty or any kind of I'd say any kind of some fees to be paid. So I think this law states that to protect some minority shareholders, but in our case, there's no minority. So
Okay.
it's important to analyze those consequences of if once we decide to deliberate dividend this year and the payment for next year, what will happen?
Okay, perfect.
Thank you.
Okay, and last is forex exposure. Basically, this we started this process last year, and what we want to evaluate is projected payments in foreign currency, payments from us to the suppliers and from the customers to us, in case we have exports, and the potential risk associated with the exposure of the foreign currency. So what we do is we calculate the average amount in dollar that we want to import from the next year, and the dollar exchange rate applied to the imports over the imports of the current year as well. And we adjust these numbers also for 2026. So in this condition, we are proposing to approve 18 million, which we think that we will not cross over this year. We have never crossed it over the 18 million in the imports. We understand that this represents only around 7% of the total purchase in Brazilian reais, so it's very low. And if we are speaking in tons, is also lower. And so given this minimal exposure, we do not see the need to implement any measures like hedge or other mitigation mechanisms. So we want to approve that we will still be paying each supplier at each invoice that they issue. So that's why we submit this assessment to the board's approval. Okay.
Just make sure, Nicole. So this kind of position, AP and A, also related to trading business only, right? Exporting, importing, importing coin from overseas, exporting some parts or trial. Okay. So the capex, some purchase equipment. So the purchase in local in Brazil, is it?
Yes, local. Yes.
Okay. No purchase from the Europe. Okay.
No, not this year. No.
Okay.
Okay.
It's clear for me. Thanks.
Okay, approval from my side.
Thank you
It's
very
okay
much.
from my side as well. Okay.
Okay, from my side.
I'm fine.
So I know we have only 10 minutes, but I would like to briefly explain what we will be working in this 2026. It is very important for us that we mitigate the risks that we have with cash flow and also working capital. So Mitsui suggested, and we agreed, to introduce the ROIC as a strategic reference metric. So currently we do not measure these, or we do not have this KPI, but from now on we will start to measure and use it as a guiding metric to drive strategic initiatives inside our plants. And because we are committed also to sustainable and value creation. So with this, we also agree, we also understand that we need to improve the working capital management. So we are working with just in time or consignment with Usiminas, but we need to expand it, and we need to evaluate better conditions with them to optimize the inventory levels. accelerate the digitalization of the material planning department, as I also explained 2 slides ago, to improve the visibility and the control of the stock position, professionalize the team through advanced training programs and some restructuring that we'll probably be doing. AMG will support us with that. In looking to the efficiency side, we understand that we need to drive operational efficiency and continuous improvement, as this is part of our values as well. We need to increase productivity and embed a culture of continuous improvement aligned with our core values. So this Gomvahi team is supporting us with that, Max Coleman, and also we are receiving some visits from Gomvahi team that are supporting us with that. The application of the SPG concepts, which is the production system of Gomvahi side, but not only in production, but we are expanding this also to operational logistics and maintenance. So we have a better organization of the KPI. Seek improvement also with the cost reduction program. We already worked on this. So this year, we were able to reduce a lot of operating expenses with our cost reduction program, and we will continue with these initiatives to reduce the costs and provide better results for 2026. And the risk mapping and mitigation. So based on what happened this year with Ioroso and also in partnership with Mitsui and AMG's team, that we are systematically mapping the risks in our plant and improving our conditions so we would not face similar situations like this again. So that's why I wrote ensure structural corrections to prevent the recurrence of the past issues. Of course, we are not in the optimal level of everything yet, but we are driving initiatives for continuous improvement, and every day we expect to be better than we were in the year before. We are understanding our failures and our where we could have problems. So that's why the mapping of everything, but and trying to, in the next coming years, optimize and improve the situation. So this is not approval point. This is just for information to the board. And I don't know if you want to make any comments.
Nicole, so for digitalization, as you know, so Mitsui has also DX team in Mitsui São Paulo, and also the Mitsui New York is also facilitating digitalization. So I'm not sure that we have exact solution of digitalization to service center business itself, but we may have the know-how in digitalization. So if you need some the help to discuss with the DX team in Mitsui Brazil or Mitsui New York, so please let us know.
Thank you very much. Thank you very much. We have already been speaking to them, okay, Kobayashi? I participated
yes.
on the DX event from
meeting, right?
New York. Yes, and then already got some contact. Thank you very much.
So now recently, the some offices and affiliate companies using the Snowflake, one of the digitalization tools for like a transparent information internally. And also another service center in Mitsui. So the system upgrade to monitor the sales and GP and also interest and the amortization depreciation per clients, update some system. So that we may have some, I believe, the knowledge, the DX. So please feel free to ask us.
Thank you very much. Okay, so I think this is it. The pending topic is the dividends. We will keep on following this with our legal teams in this week and in the next week, and then we will keep the board informed. Okay. Usually we don't do the approvals of dividends in December. We just wanted to do this year because of this situation, specifically of the new bill. So that's why we will still update you until the end of the year. Okay. Thank you very much for your time today.
Okay.
Thank you very much.
Thank you very much.
Obrigada.
Thank you
Have a
very
nice
much.
day.
Thank you, everybody. Have a nice day.
Thank
you.
you.
Bye-bye.
You
Bye-bye.
too.
Have a nice
Thanks
day.
to
Bye-bye.
you. It was very well prepared. Thank you.
Thank you, Cesar. Thank you.
Bye.
Bye-bye.